I'll be the first one there. Let's see. Yeah, wait a minute. Okay. Kind of like, how do I talk with this display? Huh. Um, trying to see here. Okay, so we have two watching. Okay, here this is the area I want to see. Okay, now we can kind of jump right into. Oh, Tyler logged in. Sweet. So now you're one of them that's watching. There's another person watching right now. I'm not sure who it is. Um, could be just a spectator or someone new, or we do have a few people that go in here that don't comment. They just like to watch and kind of observe. All right, so huh, let's see. Okay, yeah, it's so we're in 2 minutes. I'm gonna go ahead and start breaking down some things on what I see, what I want to see. Um, let's see. All right. So today was pretty crazy. Today, in the stock market, it honestly it did better than I was expecting. But what did I say last night in the live stream? And last night's live stream, I even said that tomorrow it was most likely going to be, which this was today, this night right here. Um, this hasn't happened yet. So this night right here, when we were live streaming, I even said that most likely it's not just going to push up aggressively like this and then push back down. It's going to go sideways first. So it's going to be kind of a slow day, um, which is kind of what happened. Not saying you can't make money on a slow day, but saying you're not going to see those big $3 or $4 moves. It's just going to go down from 282 to that 280, 280 or 280.50 area and then back up. So it's kind of went sideways today. Um, and I know it's like you can mistake this as an uptrend right here. Yeah, I mean obviously it's making higher highs, higher lows. Um, so it is an uptrend, but you can mistake this as a overall uptrend. This is the 5 minute chart. Uh, just keep in mind the 5 minute did break a high, so this is the high on the 5 minute, as in the last past 5 days. Um, this is the highest price traded, which honestly, you know, don't let that fool you because when you're in a downtrend that's breaking lower lows and it's continuously breaking lower lows. I mean, getting a high on the 5 minute kind of is how would you say kind of like it almost happens every time. Is what I'm trying to say. Um, Now, I posted something on Instagram earlier and people might be confused. This is the way I look at it, right? I was going to post another picture explaining it, but I was like, oh, that's explaining way too much in an Instagram story. So I was like, you know what? I will live stream it and then explain everything there in that video. Um, but you can see that the price is kind of gapped up, right? That means that most likely it'll fill that gap. If it stays up here this high throughout the whole night, it can. I mean, it's done some pretty weird things. Um, but most of all it's going to fill that gap, so either it fills it here and then it tries to determine the direction. On Instagram I said this was my desired entry. Now let me rephrase that real quick. Okay, I don't want people to think to misunderstand this and to start thinking wrong. So when I say this is my desired entry, what I'm saying is this is the area I would like to buy a call in. Now my desired entry, if the price stays high, obviously it's going to be at 282, 283 area. If the price remains, this high and it's giving us like bad indications, bad signs, um, overall on the 1 hour chart. Now the 4 hours an uptrend, but we need to make sure that 1 hour it continues to an uptrend before we actually start trading, higher highs breaking continuously, right? It's not just going to continuously start breaking highs. Typically, when it breaks higher highs, that's when you look out for a put, short term or day trading, um, because the 1 hour has yet to successfully start continuing breaking higher highs. I'm about to show you why. So if it does end up opening up here, then yes, I would buy a put. Obviously not just because it opens there. There's other things that you look at. You don't just because it opens right here, you buy right out of the gates and buy a put. It's not how it works. Um, you just want to support and resistance, and all about confirmation. You want to just play as safe as possible. Don't try to predict the reversal, as if right now we are trying to predict the reversal. We are saying that based upon past patterns, it should tend to trade down whenever it hits this top resistance right here. It typically likes to trade back down to its support at 280. um, it doesn't have to, but I'm saying that if it does show these signs of it opening up here and then all of a sudden it can't break higher highs, and starts breaking lows, then I would wait for it to push up, and then I would take a short position or a put position, in option trading and letting it fall. Maybe it won't fall to 280. Maybe I'll sell at previous support here around 281.46, 281.50 to be conservative. You can see it resisted here. It bounced there, bounced there, bounce there, bounce there. So it's a pretty decent day trading support and resistance there. So and it before did not want to trade in this area. Yes, it technically peaked in this area, but it didn't want to actively start trading in this area. It traded the majority of its time up here in this area. So that lets us know that if it does peak down here, then I would sell to be safe, because it's done it before, peaked down here and then peaked right back up, because it doesn't like to trade in this area, as if right now. Now, if it starts trading in this area, then yeah, I would watch out for it, and then we'd be watching for it to break highs, for a call the next day, which is Friday. We got to be very tomorrow's Thursday, and then it'll be Friday the next day. So we got to be very, very conservative, very um, observative, I guess you could say. We got to watch out for what happens. Now, if I go to the 1 hour, I'll explain why I think what I think. So the 4 hour, right? 4 hour, everyone's freaking out like the market's going to crash or something, when that's not true at all. I literally called out this 273 support area. I don't. I think people are trading based upon news about the whole Trump and tariff situation, but honestly, you cannot focus on news. We're technical traders, and technical traders tend to have the best outcome in the stock market. Um, a lot of times when people trade upon news, it it tends not to go their direction, and then they actually don't understand why. Like, I was watching a live stream yesterday, I believe, and it was some guy. It's a new guy on YouTube. I was watching him. He makes good content, very good videos. If I knew his name, I'd totally shout him out right now, but I don't know his name. I ran across one of his live streams, but he did say something that kind of bugged me. He started saying he was confused on why Tesla was going up. He was confused on why it randomly just shot up. And he said that there was no news or anything like that. I don't know why it just shot up. But that's the only thing he said. I was thinking to myself, do you not see the pattern? It obviously showed that it was breaking higher highs, and it's at a really good dill area. That's why it went up. It went up because that's based on previous patterns. That's what happened, due to technical analysis. So it had nothing to do with news. It doesn't. I could tell that he wasn't consistent. He's not a consistent trader, and the reason being is because he doesn't. And I give him props for whatever he does, but he doesn't stay consistent. Most likely, just because he basically wasn't open minded about it. He didn't understand it, so he was like, okay, I don't know why it went up, which is good, but don't take a position if you don't know why it went up, or if you don't know why it's going up. If you trade just on news and you don't understand technical patterns, then I mean, it's just meaning you're gonna miss out on things. Or when bad news comes out like tariffs, you might be able to grab you a couple good, because it does tend to fall when tariffs are spoken from Trump. But at the same time, when they fall, it's usually everyone thinks they're going to fall really far, and then they go right back up. And that's the whole deal. Fall, wait for the good deal, buy, and then let it push up and break highs. That's the whole point of Trump tweeting. He's not being a kid by tweeting all this stuff. He's tweeting it first of all to be transparent to America, but second of all, he's tweeting all of this so that it drops to a good deal area, so that these big, $1 million investors and institutions want to buy SPY for a good deal. They don't want to buy it way up here and let it keep trending up, because then it would just collapse. So why not let it come down if you have that power, and let it fall for a good deal area? So that's what I'm saying. So most likely 279.50 is definitely a good area too. 280 area will most likely touch, even if it isn't tomorrow. It's all about waiting for the patterns. Eventually, my price target is at 280. And then overall, of course, the price is probably going to come back up due to that 100% fall and then 100% recovery. I would like to see it pull back for a good deal at this point, which would be 280, and then see it not buy at support for a call, but to wait for that curl. And when it starts to curl and breaks its previous candle's highs on the 1 minute chart, and starts breaking higher highs and higher lows, then that's when I would take a position probably around this area, and then let it start trying to rip up and break highs, if that makes sense. The 1 year chart, I don't usually focus on this chart, but I wanted to look at something really quick. Let's see, we have 3 watchers. That's awesome. Sweet. Alright, so totally saw that support and resistance, the support we found here. Now, in other words, does a stock just go from a downtrend to an uptrend? It does not. If you just answered that in your head, then that's good. You're testing yourself. But no, it does not just go from a downtrend to an uptrend. This was obviously manipulation, or this was obviously something to do with behind the scenes that we didn't know about, which, obviously was Trump. And he did a very good job with that, because we were going into a recession and pulled it right back out. But typically on the typical side of it, it usually goes from a downtrend to a consolidation and then an uptrend, or a downtrend to a consolidation downtrend, vice versa. Let's just say it goes from a downtrend or uptrend to a consolidation, then it picks the next trend. So you just wait for the confirmation. It should not, and if it does, so be it. It's not impossible, but it should not come down from a downtrend and then push straight back up from an uptrend all the way up here. Not saying it can't. I'm saying that based on technical patterns, it doesn't do that. It needs to go sideways or come back down for a retest, maybe even break that 277.90 area, and that would still be a good deal in my opinion. Wait for the curl, and then when it starts breaking, then yeah, it would be a good deal to invest. But as of right now, why would I invest into something that is completely just shooting up, like straight up, like quick runners or fast fallers? That's how you look at it. Gold to 5,000. If the market does crash, I mean, that's what you want to do, is invest into gold. Gold is the ideal area. If you short the market during a market crash, your money will literally be worthless. If you invest into gold, then that's a complete different currency. That's a whole nother value. So your value isn't on paper. Your value is actually in and like minerals or whatever, gold, whatever they call it. And if you guys don't know, if there's anyone watching that doesn't know a good gold-based ETF, that would be JNUG. JNUG absolutely ripping since SPY is falling. Now you can see it's kind of falling. It was breaking highs, but it also is breaking lows in a way overnight. But yeah, you can see here it was trading at 922 on the day and started falling. That was due, and SPY started pushing up. So it's almost inverse, but not completely. Now inverse is SQQQ, or VIX for VIX. SQQQ, we're going to call it SQs. Okay, SQs has an inverse also that follows SPY. That's TQs, T and 3Qs. There's also VIX, which is a volatility index, but it's also a inverse view of SPY. Basically, you get two perspectives. Like, why not try to see the bear's side of the view, right? The bear's perspective. If you're an FBI agent and you're trying to figure out if a criminal's a criminal, then why not try to look for things on your side of the perspective, but also go to his perspective and see what he would be thinking. That's the best way. That's how you win things. That's how you figure out who it is. That's how you, uh, you know, overall. That's how you beat people's other entries or whatever. Like for example, you gotta. It's like all psychology. You gotta predict the future. And no, you. It's not like that. Like you cannot predict the future. But what you can do is wait for confirmation, and based on past patterns, you can kind of see where it's gonna go. You see what I'm saying? So like, um, for example, if you were to say that Nike gets a $100 bonus every month at the end of the month for selling so many shoes, and they've been doing this 5 times in a row, then that sixth time, why would you not think that they're not going to get it? I mean, they're probably going to get it. Doesn't have to, but they're probably going to. Gold to. Oh, I thought that was another comment. Um, yeah, but here, I wanted to show SQs really quick. Look on the 1 hour on SQs. Do you also see why SPY can possibly start trending back down just for a retest to 280? Because when this trends up, SPY trends down. Now, one thing that I have noticed, but here's the thing, I'll show it to you. One thing I've noticed is it pushed 100% here, and it had this gap that was successfully filled and pushed up, and then it 100% fell that push. So 100% push, 100% fall. That's a bear sign for SQs, meaning most people would look at that as, oh, that means SPY is going to just shoot up. It's going to curl around and shoot up, which it can. But based on past patterns, SQQQ has done this before. You see this area where it did 100% recover or 100% push and then 100% fall right back where it fell from. It did this before right here. So 100% push, 100% fall, and then curled and started making these curls, right? So why would it not do it again? You know, based on past patterns, if you're a technical trader, that's what you're going to trade upon. So why it's going to make a very fast recovery, but it should at least come up for a retest, which means SPY should come down for a retest. That's why I don't think it'd be very slow. I think it's going to happen very fast. I think when SPY touches that 280 mark, it's going to be snatched up. Like buyers are going to be snatching up shares like crazy because they realize, hey, you know, that recovery was pretty cool on SPY. I'm going to go look at VIX also just to get the other perspective. Now VIX did confirm a lower high, meaning it's probably going to try to make lower lows. This means that SPY could be possibly trending back up. So we're getting two stories here basically, and we got to figure out which one's the strongest, which one has more influence. I think the best thing to do is wait for confirmation. You could see though that, you know, this is the inverse. Like basically when SPY went into that recession, or we went into that very big crash, that fall that happened, and then we pulled straight back out. This one's the inverted version of that. So this one rose up big time out of nowhere, like an explosive penny stock, or you could say Bitcoin. I hope I didn't offend anyone, but this is exactly what it reminds me of. And then it fell 100%. Every time it seems to push, it falls 100%. Push, falls 100%. Push, falls 100%. It didn't. It actually pushed and then fell only about 70% to 60%, and then went up for another push. And then it fell about 80%. So I would say in my mind it is getting weaker, but it might actually do another retest. I would say to 1789 for the safety because it could make a lower high. If you guys have any stock suggestions, also I can go over any stocks you guys would like me to go over. I know. Let's see. I wanted to go over Microsoft, Amazon, and Apple. Let's go look at Apple really quick. What it's at. I want to look at Amazon too. I have a past history of actually being able to catch Amazon at some of the best deals ever. A lot of people know that that's like a part of my Moon Trades corp. A lot of people that I was trading with in Discord, they know that me, SPY, and Amazon are like best buds. Like I know them from the back of my hand because Amazon's similar to SPY, but at the same time, Amazon sometimes will go down when SPY goes up. So you got to be very careful. The patterns aren't exact; they're similar, and there's a difference in that. A big difference in similar and exact. Let's see. Apple on the 4 hour. Um, Technically speaking, it made lower highs on the 4 hour. So technically speaking, yeah, it wouldn't be so good of a good deal until it starts confirming the uptrend. Um, but if I'm not mistaken, let's go to the 1 hour. It's not breaking lows, so it doesn't have to be done. Yeah, so, all right. And I've seen this so many times on the day trading chart. Um, you can use your patterns that you use day trading. Also, use them on larger charts. They can be used in a larger form. Um, and the way you do that is, I'll show you. So, it it had a low at 91.50 on Apple. Um, Keep in mind, there's more cash flow coming in. The longer we go, more likely there's more cash flow, especially if Apple's trying to grow. Um, that all sort of rhymed there. It sounded like I was reading a poem, but yeah, but basically, the company gets better in the future most of the time. Definitely, if it's the first company to hit $1 trillion, which they did come right back out of it, but still, um, they're obviously doing pretty good. So based on patterns, they're probably going to keep doing good. They know how to market. So it pushed up and came down, and yes, it broke lows here, like of this previous push. Um, but who's to say it can't? It like all right. So I know as of right now, it looks like a lower high, but it never came back down. So it's not validated. If it comes back down to 148, the 148 doesn't keep it solid. The 148 area, then we know that this push that happened 100% would be a 100% fall. As for right now, we're at a 50% fall on a good deal area. You see what I'm saying? What happened yesterday when I call out the stock market? So I called out SPY, right? And it pushed from the 273 area all the way up to 283 today is what it hit. So that's a pretty big margin. That's $10. That's a pretty big margin. Now, one this is the same exact pattern I do, right? So if it has this 100% fall and then it has a 100% recovery, which yes, technically speaking, this is a 100% recovery. Um, if it has a 100% recovery or near it, it comes back down about 50% of the price that it pushed for a good deal, and then people start buying in, right? And it comes down 50%. Now we wait on the curl and then confirmation. So what happened here? The previous highs are, I'm going to go ahead and clear this. My MacBook is like screaming at me right now. Um, the previous highs are here. You can see it right there on this candle. This candle right here is the one you should be focusing on. Now, number one thing, these are 1 week candles. I usually do not look at the 3 year because cash flow changes. Companies are doing better or worse. So, one thing I want to focus on though is this candle right here. Keep in mind, Friday is when this candle will close. What we can do is try to predict where it's going to be by Friday. So we go to the 15-minute chart or the 5-minute chart to predict the next couple of days until Friday. And where we think it will be, we come back on this chart and look at the 1 week chart and try to find that price to see where it should or might close that around that area. But if it closes where it's at 182, 66 or higher, then that would be a valid bounce. If it pulled back and closed below this area, then it probably will try to continue trending down or either try to find a curl again. Um, but most likely, it engulfed this entire candle. And it's working on engulfing the previous red candle from that too. It's a matter of whether or not, you got to wait for the confirmation. You got to wait for that validated bounce. If we go to the 4 hour, we can kind of see if it actually validated a nice bounce, which it did push up, and that is a valid bounce. But is it pulling back for a good deal and then another run up? And now how we'd find that another run up here is that candle right there. From where it pulls back and try to retest, that candle right there is what we need to watch out on. So we'll set our alerts here, um, right there at 182.93. And if it does break that, then obviously it's going for a retest or making higher highs. In my opinion, I think it should go all the way over and consolidate overnight and then push up, or it should either come back down here and then make a decision then. I wouldn't want to see it break below the flag though. Below this price at 181, I'd say 181 solid, then it might, continue to make further falls down, and previous support and resistance, um, support here, resistance, resistance, support here. So most likely it could come back down to the 277 or 278 area, close enough. So now we have our plans, right? We have our entry, exit, and stop loss on whether the market goes up or down. So either way, we're going to be able to take a trade. That's the way I usually trade. That way I can place a trade every day. But if it's overcomplicated and the trade's not making sense to you, then it's better to not place a trade at all, because the best trade you can do is no trade at all, and that is 100% fact. I just used that Tyler's joke. Okay, let's see. There's a head and shoulders. Left shoulder, head, right shoulder, fall. Um, I like those a lot, actually. Let's see. Okay, this one didn't want to fall. It's holding sideways. That's really good. Let's go to let me check out the chat, make sure we're still live. Okay. Yeah, we're still live. We're good. We have 2 people watching. Whoever tunes out, some people just aren't really. I'm not gonna knock on them. They do what they want. Let's see. So 1 hour on here is falling. Microsoft. Whew, you can see I go on Microsoft quite often. See, and by the way, those are every day. I reset my drawings every day. That was just from today. Like I do it every single day. That's how many breakdowns I do in my because if you don't, then you got to find stocks one way or another, and I break them down all the time. So every single day at the end of the day or the night when I'm live streaming, you'll see me clearing my charts. Like tomorrow night, it's gonna probably look the same exact way as that just did, and then I clear it. It's just because I'm on it all the time. Um, so we're getting this typical support and horizontal support and resistance area. The typical area is to trade upon this area. Now you can see here that it made 100% fall, 100% recovery, came down for a good deal, and then pushed up to break highs, and then came down for a good deal there, and pushed up to break higher highs. And then it did 100% fall again, which made it come back into this area to trade again. It bounced in that support, previous support, new support, whatever, new resistance also, which we're about to see. Pushed up and hit this resistance, which is a past resistance multiple times, and it fell back down below the support. It actually had a gap down and opened below the support. It tried to break back above, but the candle didn't close above that support, so it's still trading below the support. Um, so new resistance. So now it's trading below this area, which is a resistance. It comes back down and has a gap down. Gap downs tend to fill, so it tries to fill in here and could not close anywhere above that resistance. So it continues because the fall is not over yet. And then we start seeing this. We could have called this out here by looking at the previous retest, right? So when it falls, it tries to retest and comes back down. Now when it fell right here, whenever it fell, it went to break. I would have my alert setting at 120.46, right? And then it would push and it would alert me here on this candle that, hey, we just broke 120.46 or whatever, 120.50. And I would not take a position when it breaks. Remember that. I do not enter when it breaks highs. I don't. I wait for the good deal, let it do its thing, watch it. And in this case, overnight, it had a pullback. And then on the pullback, that's where you want to see it break that high. When it does that, then you want to be taking a good position, either there or on the good deal area to trust it. I wouldn't typically trust it. I would let it break highs again, and then I would take a position. So in this case, right out of the gates at 280 or 121, and then sell it somewhere probably at 122.77, because that first right candle would show me that there's some resistance there. Doesn't mean it's going to fall, which in this case it didn't. It just means that it possibly could. So I would sell there due to that previous resistance that we had there. So we did this 100% fall, 100% recovery, and then it made further highs. Which one was that? Microsoft, Apple, SPY. Go take a look at DGAS. I'm just curious about that. Good grief, DGAS. Good, good grief. Now, DGAS tends to stay with its patterns very often. I would have totally called this out too during the day. From 130 all the way up to 140, easy peasy. Literally, look at this. It's my trading strategy that I completely see here. Now you can see that there is a previous resistance here. Old support resistance fell down below it. It tried to go back and trade in between these areas and couldn't do it. And then it retested and opened. That was how you could validate that support there. It opened above that support, and look at the body of the candle. It's resting. I like to look at it as like these bodies of the candles and the wicks are almost like a guy, like a character, right? It's like the body is sitting there on a cliff, on a support. His legs are dangling off the cliff, off the support, and he's just kicking his legs around. That's how you can look at it. So he's well rested on the cliff, right? Most likely he's not gonna fall off. Let's hope not. So hope there's not a hurricane coming by. So it pushes up, rejects from that resistance again, and then it gaps down. It tries to fill that gap, of course, because it always tends to fill the gaps. Some people there's even a trading strategy, and I do it every once in a while. When there's a gap down, I use it as an indication instead of a strategy. But in most cases, usually it does like to fill those gaps. And it filled the gaps here and went up and broke highs. And then now people are waiting for the good deal. It comes down, and in this case, the good deal was right out of the market, right at 9:30. I would have taken a position around that 129, or probably honestly that 130 area, around right there, because it broke highs. So right in that area, I would have taken a position, and then I would have sold it somewhere near when it started showing lower lows or showing signs of resistance. Uh, Honestly, this whole entire day, I would have probably sold in one of these two candles right here that had this big wick. Um, and a lot of times you can't trade like based upon candles. Like technically speaking, this is two gravestone candles and they are bearish. But does that mean it falls? No, it doesn't. It kept going up. It just means there's some resistance coming. There's some bears in this area. We want to be very careful because we are approaching their territory. We don't want to um, get super greedy in their territory. Like they have most control in this area. Not saying it's gonna fall there. It's just saying that we got to sneak our way through, basically, if that makes sense. So I would have probably sold in these two candles around that 140 area, a good $10 jump. And then DGAS has an inverse, which is UGAS. It's the inverted version of DGAS. And it's down to 1766, which is really weird. Did it have like a stock split? What in the world? Obviously, it's making lower lows. What I would see for this, if anybody's wanting to know, um, I would look at its downward momentum. Most likely, it's probably going to come back up and retest that 2236 area. Not tomorrow. It's not just going to shoot up and do that. I mean, over time, we're on the 4 hour. So over time, over the next, this is where I use the trend line tool, is to see how many days it is. I would say within the next 15 days, sometime at the end of the month, there might be a retest at that 22 area, and then further breaking lows if it sticks to its pattern where it makes lower lows every time. So technically DGAS is the bullish one and UGAS is the bearish one in this case. Previously, before, it was the opposite of that. Whenever it was pushing up, that push was insane. I remember trading this area right here. Is that December or November? This area right here was insane. There was this nice support and there was this nice resistance. And yes, it kept breaking above it and below it, but I was trading, like, I remember trading right here on Discord, and I would buy, sell. Look at this. You could have bought, you could have sold, you could have bought, you could have sold, you could have bought, you could have sold here, previous resistance. If you didn't, you could have bought or added to your position and sold here. It's like, I definitely think that, nicely done. Sorry, I got a comment. I was reading it. But yeah, I definitely love that pattern right there. Horizontal patterns have the volatility. So again, this is what happens in the stock market. It goes from an uptrend to a downtrend. No, that is not what happens. That is not what happens in the stock market. That's completely wrong. And if your brain just told you yes, then you need to really have concerns. And if it did, I'd make yourself write it down about 10 times to engrave it. You need to engrave it one way or another, whatever way works. It's better than losing a ton of money. Um, so it goes from an uptrend to a sideways trend. Then it picks direction. It could go up again. It could go down again. It's a matter of, like, here, I'm going to roughly draw this really quick. Just really fast, because it's not just this simple, you know. It could go up. It could even come all the way down here and make these weird patterns. But overall, this is probably going to be the trend. You know, these candles are going to be like all weird and stuff. It can go up here, go down here. I'm not trying to overdo it, but I'm trying to just give you an example of what's going on here. Let's see, doesn't break lows, but doesn't break highs either, so that's a sideways trend. Let's see, so right here. Now, in this moment, what we would want to see is it break this high right here. Here, hang on. In fact, I'm going to get back my level tool and see right here and right here. Edit properties. I'm just showing you guys an example on how you can predict this the stock market the easy and simple way. This is just simply putting it. Most people are not going to tell you this this very simple way. And the reason being, it's because they usually have a course to sell. Why would they tell you all their information in their YouTube videos if they're trying to sell you a course that has the secret info that they're not telling you? Right? It doesn't make sense. If you have a course, you're obviously not saying your full like strategy or whatever. But I would set my alerts here above this area, this red line, and set my alerts below this red line. So if it were to break, get that trend line out. If it were to break this area, then obviously it's going to pull back for the good deal. Not enter when it breaks, but pull back for the good deal and bounce and continue to make higher highs. So it went from an uptrend consolidation trend to an uptrend. But at the same time, if it were to break this area, then we would wait for it, and it's vice versa. It's the inverse. There's always an inverse. Where there's very good, there's very bad. And that goes for anything. So it pushes up, wait for the good deal area for a put, and then it comes back down and makes lower lows. It's vice versa. It's exactly what would happen if it goes up. It makes this weird looking shape, right? So it's literally the same exact thing, besides it's the opposite. I hope that made sense, and I hope I didn't overcomplicate it, but that's how you want to look at it. Because I know you'll see a lot of pictures that says, it says like accumulation, distribution, accumulation. It's like, it's just up, down. It looks so smooth, easy, and simple. Who wouldn't like guess like, oh, it's down, I'm gonna buy it because it's gonna go up, and then oh, it's up, I'm gonna short it, it's gonna go down. Like, it looks so simple, but when you're trading, look at this. This is what they're meaning. This would be the accumulation area. This would be the area that it goes up, down. But look how many times it went up and down during that rise. So during this curve that looks so simple on Instagram and other YouTube like videos, on Google pictures and all these, like, you know, these people that are trying to demonstrate it, these demonstrations, they look so simple, but in reality it goes up, down, up, down, up, down, up, down, up, down, up, down, and then that's the curl. That is the circle area that you're looking for. Same for this. It's not just a straight up trend. It could go up, way up here, down, down, up, up, down, down, up, 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 down, and then sideways. And it's like, it's very just overwhelming. When they say the stock market is like a emotional roller coaster, it is if you make it that way. If you day trade it day by day, sell at your previous resistance, you don't have to go through that emotion of, oh crap, one moment I'm down $600, next moment I'm up 700, yes, but now I'm down 700, and I'm up whatever 800 in 30 minutes to an hour. It's like, if you don't want to go through all that, just sell previous resistance, grow your account consistently. We actually did the math today. Me and a buddy of mine did the math today. If you make 5% every single day, 5% adds up very, very, very fast. If you do 5%, just get on your calculator and do 5% daily. So 5% 5 times a week. And you can't do 30 days because there's not 30 days, 30 trading days in a month. You have the weekends that the market's closed. So you got 22 trading days every month. So do the 22, trading days as a month, and do your 5 days a week, and do 5%. Now 5% is easy. I just uploaded my live trading just this morning that made 5%. And I was up at one point, I was up 12.50%. that's, and I could have cut it. It just didn't fill my order. And the mistake I made was, um, if you ever watched that video, the mistake I was making was I was trying to sell at the highest area. Basically, like when I went to, see if it lets me, if it shows me. Basically, when I bought it at $1.30, um, I sold at $1.37 for like a 5 or 6% profit. Um, Now let's see, here's the area I wanted to show you. I bought at $1.30, right, and I was filled. I tried to sell at the highest at $1.44 for a 12.50% profit and had to cancel it because there wasn't buyers to take to snatch up my contracts, my 200 or my 400 shares that I was carrying, four contracts, 100 shares per contract. So no one wanted to snatch up my shares at $1.44, but if I would have brought it down and sold it at $1.42 or $1.43, I bet $5 my contracts would have been bought. I bet my order would have been filled at around 11.50%, which, lesson learned. So, and I should have known that. I don't know why I was sitting there trying to sell it at the highest price. I think I was excited, because I was like videoing or whatever. Uh, I almost didn't even wake up this morning. I was so tired last night. I started waking until 4 in the morning. Um, but yeah, you can see the trade. The trade was only a 4 minute trade. So I bought in at 1:30 at 10:30:15. I sold at 1:37 at 10:34. It was a 4 minute and 15-second trade to be exact. So it was very fast. To make 6% in 4 minutes, guys. Like, let's be realistic here. Some people can't even make 6% a month. They can't. And we just made it a day, and that's minimum. That was easy. That we could have cut 12, 13 almost. Um, Next time, if we're up that much, let's just remind ourselves, don't sell. When you're trying to sell, like, I don't know if I can give an example here. Let's see if I could try to give an example. So if I go to the trade tab and I go to place a position, on the 7th or whatever, and I'm doing a call, and I try to, see what happens. I'm just curious. Okay, yeah, here's the bar. Here's the thing you want to focus on when you're selling. Now this is the area where you can adjust your price. I could buy it at a $1.32. I can raise up my price to $1.33, and I can raise it up to $1.34. Now, if the price of the contract is going for $1.34, let's just say you bought it at a dollar and you're making like insane profits, and it's at $1.34. Don't sell at $1.34. Try to fill in your order around $1.33, or maybe even sell at the low of 132 because you know you'll be filled. It's better than not getting filled and sitting there waiting a couple minutes and then it drops to $1.20. You're still profiting, but it's not nowhere near as much as you would have if you would have just sold at the lowest point. So this bar comes a long way. You can make it simple by just, instead of a limit order, you can definitely make it simple by just doing a market order, meaning it sells at whatever the price is going for. It could sell at $1.34, it could sell at $1.31, for you. Whatever people are asking for, it just sells it to them. Um, the limit is just what you're asking. This is my limit. If it is not at this limit, I don't want to sell it. So it'll only sell if it touches that limit. That's basically how that works. Let's see. So we got some big, big candles here. And again, when we saw the big candles in D, guys, this is a characteristic that most stocks tend to have. I even pointed it out here. These big candles. It shows that bears are in this territory. But does that mean that it's going to fall? No. Most of the time, I've noticed this. The candles wicks usually point the direction. Most of the times, you're taught that these are big bad gravestones or pen bars. You don't want to trade based upon a candle pattern. You want to look at them all as a group and a pattern. Like this is the high. I didn't look at just this candle. I looked at this is a high. You can confirm, breakout with the candles lows of their wicks or the highs of their wicks. Um, but I even said this in the other night's live stream. I said this in the last like three live streams that these two live streams. Let's see. That these two candles were going to probably point the direction. Look, we have a big wick here, but it pointed the direction. But look what's also going on here. Point down, point down, point down. Yes, point down. Yes, technically that's bullish or whatever, because that means that when it came down to this area, buyers are all in this territory. It came down to this area. buyers bought it back up to here. It at one point started. This candle was a huge red candle, and before the candle closed, buyers came in and bought it all the way back up to that 283 area. So technically, it can be bullish overall, but that doesn't mean it won't come down for a good deal. So most likely, people enter too early. So as if we know they're entering too early, and then they're going to end up selling as a loss here, not knowing that this just might be a higher low, and then it breaks highs. So we're going to wait for the confirmation. If it opens down here, then yeah, technically in my mind, it would be a good deal. I wouldn't buy it at the touch of it. Again, I try to stress this. What's up, Shirley? I wouldn't buy it at the support when it touches this. You can do this so many times and you will not learn from it. Literally, I'm telling you, I see it happen all the time, and I used to do this thing all the time. You can buy at the support with even telling yourself that you're not supposed to. Because when you're trading, you don't fully think about things. Your brain doesn't function like it does when you're not trading. Because when you're trading, you're more peer pressured that you're trading your hard worked money, and you don't want to enter at a bad price. We're overthinking it, which makes us overthinking can't be good in certain things like this because it results into taking a position too early or selling too early for a loss. But if we wait for the confirmation, then we can see if this goes sideways, great. And then if it breaks above the 283 area, 283.20, yeah, I'm going to enter for a call to 284. Well, why would I not? Um, and no, it doesn't mean I was wrong about the prediction. I mean, I can't predict the future, but one thing I can do is wait for the confirmation. And if it does start breaking these lows, then it's probably going to come down and touch, and it's probably going to make another candle like this. So right when you buy in, you might actually get it up, bought right back up, which would be good for you. That's good stuff because that means you make fast profits. I would just be sure to sell to confirm the profits. You want to make sure you profit. Wouldn't it stink? Oh, we're talking about Starbucks here, aren't we? S-Bucks. I saw that comment. S-Bucks entry at 80.14 with a stop loss of $1.13 with a price target of 82.64 with this 2.21 to 1 ratio. Let's see. I see where you're going at. The $80 14 cent area. Let's see. Let's go to the 1 year. So look how consistent. Yeah, I was trading this. This was in the middle of 2018 when I was trading that. I just never deleted the trend line. I remember that. It was like a while ago. But now, technically speaking, yes, it has trended up quite a bit. And did you hear about the story about how if Starbucks partners with who was it? Not they don't buy each other out. They don't do a partnership like that. It's more or less like if the CEO of Starbucks works with Trump, it can get us out of a market crash, right? And I know that seems stupid and irrelevant, but just look it up. There's background stories on why it can. There's reasons why Starbucks can actually do that. Um, but you can see, I mean, obviously it's breaking highs right here. Uh, that means that it's not a good deal. That means that you want to wait to enter. But I see what you're saying though. If it does push up around the 82 area and then comes down at the 80 area again, the 80.14 area, then technically it would be a good deal in my mind. If you let's see, so didn't technically fill that gap. We're on the 1 year chart, so it's kind of irrelevant. 4 hour. I'm just kind of doing some breakdowns real quick. 100% fall, 100% push. What happens every single time? We have been over it night after night after night. What happens every single time? And I'll give you a minute to say this. You don't even have to comment it. Just tell yourself this. When it has 100% fall and then 100% recovery, what do we wait for? We're going to wait for a good deal because the fact that it's at 100% recovery means it's at this price it usually gets rejected at. And if it did 100% recovery, then it still is probably going to get rejected, but then it's a matter of if its previous resistance, new support, are you kidding me, can hold it. Let me get a price level. Let's say, to be safe, here. So, it bounced here once, it rejected, bounced, broke through. So it made a 100% recovery and then used it as a support again and pushed back up. Now, technically speaking, it broke highs, so it's not really necessarily a good deal. we want to draw these supports, the previous resistance, resisted, and then broke below. So most likely it'll use those resistance as new supports. So when it comes down, you can't really predict exactly which support it's going to use. What you can do is you can see here, like if it starts to form a consolidating area, which is a curl, if it starts to make a candle here and then the next candle breaks that candle's high, then that's a valid bounce on this support, meaning this support was the one it's going to use. Now it's going up to retest this 70 or this $80 area or higher. Most likely higher since it made 100% recovery. And that is on the overall chart. If that was the 1 day chart, you would want to see the overall direction, because if the overall direction is down, but yet the 1 minute chart is showing 100% recovery, you don't want to always trust it. You don't want to always play bull patterns in a bear market. It's their territory at the moment. You don't want to make them mad. They're most likely in control if the overall pattern's down. In this case, the overall pattern's up, so we're getting this 100% recovery. Now the 1 minute chart is overbought, so when it comes back down for a good deal area, then yes, we would definitely look for a nice position to bounce back up. Just trying to see here. Rejection, support. See, like if you would have done the pattern I trade, you would have never taken a position in this area until it breaks highs and comes back down for a good deal. As in, like, it comes down, breaks, it retests, falls down, pushes up. It broke the previous high, but did it break this previous high? It didn't. And is it at a bad deal right now? Based upon its patterns, it typically trades lower than this area, so it's a bad deal. If it comes down to around that 79 area, then yeah, I'll take a position, because that would be a good deal in my opinion. If it came down to this area, I would just wait for the confirmation to know for sure. Lyft, I heard about Lyft. How is Uber going? I heard about Uber too, becoming a public trading. Let's see. Ooh, I don't like the lows and highs on a 1 minute chart. Usually when you get a high and a low on one chart, it typically makes a 50% fall of that high. But that goes for really anything. But I'm just saying. We are getting this on the overall chart though, a high to a low, meaning it could make this 50% recovery to its high. So high, low on one chart usually tends to try to go back up. Now, I wouldn't trust this area as if right now. I would wait for the pullback and see if it can hold that support, that previous resistance. See if it can hold that area. And the way you know for sure if it held is, set your resistance area. If it comes back and holds and then breaks that area, then it validated that was it held price. People are accepting Lyft at this price, is what it would be telling you. If it couldn't hold, then it's never going to break that area. It might double top, it might retest it, but overall, it won't break. The candle needs to close above that area. Let's just say that. And then the next candle opens in that area, so it's actively trending above that resistance. But as of right now, I would be setting my alerts for this one just in case, because it is at a typical area that it comes right back down. Typically, when it touches this area, it comes down, hits a support, pushes, and then comes down, hits a support. And then it did this this pattern here that I see all the time. It does this retest, 100% fall, 100% rise, 50% of the rise right here, good deal area, and then buy for a push up, and then add in the dips. So that could have been a good trade, but as of right now, it is overbought. So I would buy Lyft if it ever came down to like that 55, 56 area, if it showed signs of that curl. That's when I would typically buy it. GPK. Entry at 14.13 with the stop loss of 159 with the price target of 17.50 with a 2.11 to 1 win ratio. And by the way, for the people that are viewing, hang on, let's see who's all still here. Okay, we got 3 people. For the people that are viewing right now, and I'm going to try to cut it off in 5 minutes to keep it an hour long. I don't want to waste too many people's times. I don't know if you guys are enjoying this or not. But basically, one important thing when you're mentioning the win to the ratio, a lot of people want to know my ratio. A lot of times I do that. I do like a 5-to-1 ratio, but here recently my ratio is a little out of waters, and that's why I don't mention my ratio. But it's usually a 20-to-5 ratio. I am enjoying. Good, good. Yeah, thank you, Shirley. Awesome. Um, Mine's usually a 20 to 5 ratio because I trade options, and that's the only reason why. What that means for the people that don't understand the ratio part of it right now, it means that if the stock isn't offering a 5 to 10% or a 5 to 20% profit, then I won't take the position. But if it's offering anywhere, if it basically the risk is where it comes in play. Like, all right, so Ricky Gutierrez, there we go, Ricky Gutierrez. Um, if anyone, I'm sure everybody knows him. I don't even know why I'm asking that. He's pretty popular now. Um, if anyone knows him, one thing that he does, he has a 5 to 1 ratio also, meaning if his if his profit's worth 5% and his loss is only a margin of 1%, he is willing to risk 1% of a loss to take a 5% of a profit. So, if the trade didn't go his way because, you can't predict the future, then he would cut his loss at a 1%. But if it goes his way, then he's probably able to make 5% if he held in. Doesn't mean he will make 5%. It just means he'll cut it from 2 to 4 to 5%, possibly. But if it's not offering that 5% margin of profit, then he won't take the trade, um, because that means the loss is most likely outweighing the margin of profit, and you want the odds to be in your favor. That's why he's so consistent. But yeah, when you hear someone saying like a 5 to 1 ratio, that means it's like a 5% margin to a 1% loss. So that would be a good deal. I don't know who would not do that. Like, oh, here's a gold bar in a vending machine or a claw machine. You have a 5% chance of winning this gold bar. Um, or we could say you have a, good Lord, sorry guys, my dog is like snoring like crazy right now. You have like a, out of, let's just say out of 5%, most odds 5%. So you have like a 5% chance of winning this, it technically be 6% chance of winning this gold bar out of the claw machine. And you have a 1% chance that you won't. Would you not take it if the max percentage was 6? Like 6% is a total 100. That's 100% right there. And so technically 5% you're setting at 90% chance of winning that gold bar, compared to a 10% of not winning it. I mean, I'd definitely take it. Is that Pepsi? I haven't checked Pepsi in a long time. It's been a very long time since I saw this. Oh, it's PepsiCo. Pretty sure that's still Pepsi. Have you seen Coca-Cola? Coca-Cola, apparently they're doing a deal with Tesla. I'm not going to talk too much about it. I don't get into news too much, but I do have my ears open. I do know what I'm trading in that day. Like if there's tariffs, a lot of times I do focus on puts. I don't want it to go down. I just basically say if the trend is up, I'll trade the pullback. Everyone knows I'm pretty good at trading pullbacks also, just because, uh, like if this were to push all the way up and it's not a good deal anymore, then I can definitely short the pullback, and sell at its next support, even if it is an uptrend. But most of the time, the trend's your friend. You don't want to trade against it. Typically, in this scenario, I don't like drawing ascending lines, and do not get yourself in this habit because it will become a style. I kid you not. I've done this multiple times. You don't you don't want to get in the habit of trending of trading upon ascending trends. You don't want to start drawing these ascending support and resistance and trade upon it because they change like no other. This most likely is not going to touch the top of this resistance, even though it has done it quite often. It's probably not, and the reason I say that is because watch. See how in this area it broke these highs, right? It pushed all the way up to this area, and now in this area it broke these highs and pushed up to this area. Wait, first let's come down. This I'm gonna draw it over here. This area came up and pushed to this area. Next one. This area came up and pushed to this area. Next one. This area right here came up and pushed to this area. Now, I don't know if you're noticing something, but you see how the higher highs are getting weaker, they're getting lower, as in this margin was pretty decent. It went from this 117 to 122. And then this one went from 122 to 128. Decent. But this one, when it tried to break highs again, it only went from 128 to 130, a $2 move before it actually came 100% back down. Now it's pushing back up. Most likely, though, based upon patterns, it's probably going to reject and start trading off of this trend, meaning this trend should be changing. It's either going to go sideways, right back down, meaning my price target for PET is right here. My price target is at 127.30, and I'll set my alerts actually for when it does come back down here so we can come back and look at it. Um, Most likely that's what's going to happen because it's getting weaker. Not saying it's going to plummet and drop. I mean, obviously the trend is up overall, so it's probably going to pull back though. It doesn't just uptrend and then downtrend. It uptrends consolidation trend, which is sideways, back and forth, and then it picks a trend up or down. Walmart. So let's go look at Walmart really quick, and then I'll start to end the live stream. Yeah, let's see. Walmart is pretty good. Um, Now, I used to trade Walmart in the past. When it had that gap up, though, I did not trust it because see, it wasn't filling the gap. I remember whenever it was trading right here, I broke these highs, and I was like, wow, it's trending back up. How is it even trending back up if it didn't even fill the gap? That's not really safe. Typically, when that happens, you just look forward to it filling the gap, basically. So further into the future, literally a couple months later, it actually filled that gap a little more than it should have. It came all the way back down here, but then people realized, wow, that's a pretty big fall, and came back up into this area. Again, it is at a high risk area for a call, but maybe a put. I see what you're saying, though. I mean, if you're wanting to swing trade, I see what you're saying. You're definitely correct with that. Like with your entries and exits and your ratios, you're definitely correct with it. A stop loss of $4.03, not bad. 105 as your entry, 105.50 is your entry, and you got a price target of 120, around 121. If I go to the 1 year chart, that 120 area is pretty high. I don't typically go this far back, but I do see what you're saying though. It does tend to keep breaking highs after highs after highs, and now after this big fall, it did make a higher low, and it's still growing. It is still growing. So I think if you're a swing trader and you want to hold a position for a while, towards the couple months, whatnot, then yeah, I could see that being a pretty good price target. But then again, I'm sure you know this, Shirley. Price targets aren't always. I'm saying this for the other people. I'm sure you know this. I'm almost positive. If you know about a ratio, then I hope you know about this. I'm sure you do. So, but a lot of people mistake this when I say that I have a price target at 280, like on SPY. Um, I say that I have a price target at 280. Uh, that doesn't mean that it's going to be my entry or my exit. Like basically, if I say that SPY is going to have a price target at 284.50, which I do not at this moment. I do think eventually it will go up there, but I'm not even mentioning that right now. Um, but if I just, psychologically said my price target was 284.50 around this area, technically speaking, technically speaking, I don't have to sell at that area. That's just my targeted price where I think that it will end up eventually. It doesn't mean it's where I will be selling. And people really misunderstood that. When I used to do my Discord and my Instagram, people would say, "Oh, your price target on Amazon was 1,500, and it went only to 1,450." And I was like, "Yeah, because patterns change. You can't predict the future 100%." But you can watch it. And I called out the change of the pattern and said, okay, price target's no longer valid. Price target's changed, going back down to 1300, and then it starts heading back to 1300. So I would break down another stock, but we are going on. I want to try to stay consistent with this. We're going on an hour and 4 minutes. I want to stay consistent with this whole hour live streaming thing. I will be doing another video tomorrow. I might actually live trade tomorrow if you guys would like me to. See if we can make some bigger profits. But um, I'm about to be starting this $1,000 account challenge. I'm wanting you guys to have a little bit of time to maybe save up or invest. I know when you try to transfer money to another account, it does take about 3 days, and then another 3 days for it to actually be tradable. So it takes a while. So I'm giving a little bit of time for people so that we can probably basically trade this $1,000 account challenge, and you guys can kind of watch me live. I don't know if I want to go live with it or if I should just record it like a video. If anyone wants to comment that and give me a suggestion, then I might, it's, I don't know. I don't know what I would be doing. We'll see though. It's AEE. What is that? Sorry, I was looking at AEE. I'm not really sure what that is. I forget what AEE is. It's not American Eagle. No, American Eagle is AEO, right? Is that an airline? What is AEE? I don't know. I feel like I'm probably like stupid right now. But yeah, no, thank everyone for joining in. Whoever just joined in and just started watching, you're joining right at the end of the live stream. But I do appreciate the thought, though. Okay, it's the thought that counts. I'll be doing another one tomorrow, and I might be doing a live trading session tomorrow morning. We're gonna see where it opens up. If SPY opens high, we're probably gonna be looking for a put. If it opens low, we're probably gonna be looking for a call, because of the price it's trading at right now, this horizontal area. Because again, it doesn't uptrend and downtrend or uptrend and uptrend. It goes uptrend and consolidation trend, meaning typically it likes to hit that support multiple times and that resistance multiple times. But yeah, hopefully I didn't take too much time out of your day. And I hope you guys had a wonderful day, and I will see you guys tomorrow. See ya.